Alrighty, what is good? I hope everybody is doing well. So this is going to be the video going over the dream model, which is kind of just a play on a previous or a model that I traded prior. All basically that has changed is it's just one little entry refinement. And actually it's kind of funny because a little bit of a backstory of why it's called the dream model before we get into it was actually I had a dream, no lie, like straight up hand on the Bible. I had a dream about this refinement, and basically that next morning I went and looked at the charts and kind of went and back tested it, and I was pretty shocked by how prominent and how accurate and how viable this entry was prior to what I was doing. And I truly think that, and I'm talking about like a specific entry technique. I usually kind of vary between three. I'll use yeet, which is just an OTE level. I use the midpoint. So the 705 and then the 79, and then sometimes the midpoint of that, if it's in a proper, like a proper distribution leg, right, that has proper market structure aligned with it, right, then I'll use the dream model, which is what we're going to talk about today. And then I also use, it could just be zones. It could be hidden S&Ds, which is just within the wicks. And stuff of that sort. Usually that's on a little bit of a higher time frame, as it's going to be a little bit of a higher probable kind of entry technique for that respected entry, right? So before I start, I want to kind of preface a couple things. Let me go full screen here, so it's a little bit better and you can see a little bit more. But I want to preface a couple things with this. I think the best time frame, now this works on all time frames, but the sweet spot time frame that I have found is going to be the 3 minute. This is kind of the bellwether time frame for this specific entry technique. You'll see a lot of false signals on the 1 minute. And if you're not the greatest at kind of filtering out those ones that are not super high probable and really waiting for that high quality trade that is aligned with several things, right? I use multiple confluences for all of my entries. I truly think the 3 minute is going to help kind of clear that up for you because it removes a lot of the blur. It's really easy to keep up with. It's nothing insane. And I do believe there was a 5 minute one that we're going to cover too, kind of just to show a different time frame once we establish the basis of this, right? So I want to go over here and I want to draw it first and kind of explain it prior to actually getting into some candlestick ones. So essentially, all we are wanting is a CSS, right? So the way I validate my CSSs is this way, right? So for a CSS to be valid to me, it has to do one thing, right? It has to close above. Let me drag this out a little bit more so it's even, otherwise it's going to drive me crazy. So we'll do this, right? Pretend these are two up close candles, right? So for the CSS to be valid, we'll go to the midpoint of this right here. We'll draw some wicks right here. And this is a fantastic thing to look for CSSs. It's going to remove a lot of unnecessary, basically points that are just distracting. And it's going to really give you those higher probable areas, right? So for a CSS to be valid, and this is obviously this would be completely flipped for a bullish scenario, right? And you'll see that when we go over some setups. And I'll explain kind of each point so you see it visually, right? So for a CSS to be valid, we have to close a body above right here. Once we close that body, if we get a body closure below this candle, right, this validates that CSS for me. Why? On a lower time frame, what is this? Close above, close below. Simple process. Very simple process. And before I continue, I want to definitely note that this is derived from Dave Teaches FX, right? This is his material that I've kind of just turned into my own way, and I want to give credit to him because he's really opened up my eyes in terms of the market. I've never been so precise. I'm able to several times actually have caught low or high of day, basically to the tick or a couple ticks off. It's pretty crazy once you dive into his material, how accurate you can really get in these markets, right? So like I said, that's how CSSs are validated for me. It would just be flipped for a bullish scenario. And like I said, we're going to go over that. So with the dream model, what we are wanting to see, and actually I want to put those back up. So for the dream model, what we are doing, and we'll add a box right here and drag this down a little bit, right? So And I'll go over the nuances too. I'm not going to hide anything in this video. I'm just going to give you basically every single thing that I look at for this specific entry technique. This is going to be a one-time video. I'm not going to be making another one probably about it at all, unless it's some sort of market review that I post going over some setups, right? So with the dream model, right, once we have our validated CSS, what am I waiting for? I am waiting for price to what? Price to trade back up to at least the 30%. Obviously, like if we get a 50% mitigation at that same time, we're tapping the 30, that's even better, right? So what I am waiting for is price to trade back up at least to the 30%, right? And what I'm waiting for is once we get in here, I'm waiting for the candle that trades back through the CSS low, right? Like I said, this is going to be vice versa for a bullish and errand. We're going to go over that. Like I've said multiple times, you're waiting for that candle that trades back through the CSS low, right? Once that closes, we are going to be placing a what? A sell stop below that candle. A lot of times, and why this is so important with these buy stop and sell stops off of CSS mitigations is a lot of times what you'll see is price will tap the 30, the 50, come down here, tap you where I personally used to, because kind of before this refinement, entry refinement, what I would be doing, and I didn't have an issue with it because I would pick really good ones, but I did notice for the people that I teach, right, that they would sometimes run into some issues basically on fake outs, right? And this alleviates all of that. Alleviates all of it. Beautiful, beautiful thing, right? So prior, what I would be doing, like the normal entry technique would just be 30% mitigation. Once that happens, I would just be placing a sell stop here, right? And then sometimes it could come down, tag it, get that fake out, and then just go right back up to that high. And I'm sure a lot of people that trade kind of like this, you know exactly what I'm talking about, right? So that's all that is. That's the dream model. It's a super, super simple process. And then now, like I said, we're going to get into some examples, primarily based on today, because obviously I want y'all to be able to go back and look at this and back test it. There was plenty of examples today on the 3-minute. And like I said, I believe there was a 5-minute. Actually, we could probably go ahead and go up there. Nothing too crazy on the 5-minute. I take that back, actually. I was just kind of expecting it to maybe be there, right? So first and foremost, right here, right? So if we delete all of this, and I want to remark this up, right? What do we see up here, right? Where is our recent break of structure candle, right? We close up above this, right? This is in sequence with what? This swing high over here. Is this the cleanest CSS? No, but it is a CSS, right? So once we have that and we get this body closure right here, right, at this 8:45 a.m. CST candle, what does this validate? Validates this as a CSS range, right? That's our most recent break of structure candle. Once we close below that, that's our lower time frame flip, right? So what I am waiting for there is what, right? I'm waiting for at least a 30% mitigation, and then the candle that trades back through the CSS low is where I'm going to be placing my sell stop. I would recommend doing one tick below, one tick above for the respected trade, just in the instance that you get an equal low placed here and then price pivots, right? So where would we be taking our entry in this case, right? We'd be taking our entry right below this candle. Where can we place our stop? You can place your stop at that candle high that trades back through the CSS low, right? So our stop would be here. Where would our entry be? On the break and trade through this. It would be a sell stop and you'd be tagged in, right? So the beautiful thing about this, right, is a lot of times what you'll see is it will kind of mitigate your total range risk, right? It's a beautiful, beautiful thing. And you can actually catch bigger moves based purely off of it, right? So like I said, I want to kind of reiterate, I'm going to go over each setup twice so it gets ingrained in your head because this is pretty important and I don't want to see you mess it up, right? So the candle, right, after the mitigation right here at 9:09 a.m., this is the candle that does what? Mitigates the 30% of this CSS on the 3-minute, right? Once that happens, the next candle does what? It's a down bar. What do? We trade back through this CSS low. So for example, let me say this, and this is relative to what I was talking about the previous entry technique, right? Once this mitigation happens, our original entry would have been where, right? It would have been at the 7250 level, and look at all this drawdown we would have had to face, right? 37.75 points of drawdown. Do I want to be in that? No, I like the trades and to be in trades with the least amount of drawdown possible, right? So if you look at this, this trade almost has zero drawdown, right, with that refinement, taking the sell stop below the candle that trades through the CSS low, right? We trade through it and we continue and we run down to this low. Could have been a 100-point play for you, could be whatever. Now, I want to talk about something specifically with this and something I've talked about a lot of times, just as an extra confluence in terms of targets. Fib projections, right? CSS projections is a huge, huge thing, right? What do we note about this, right? If we get a CSS projection off of this, which is just -1, -1.5, -2, -2.5, and -4, right? Those are just kind of standard deviations away from a specific candle. I do believe standard deviations are one of the most important things in the market. It gives you an understanding of why certain retracements happen at certain points, et cetera, right? And if that doesn't make sense, you can go back and watch through previous videos where I've talked about it, because I'm not going to go over them too in detail right now, right? So from this, right, we've established our what? Our projections off of our CSS, right? Why? Because we know this is a lower time frame manipulation phase, right? Move down, move up, expansion down, manipulation phase, right? From there, what can we do? If we really want to stretch your target, and I'm going to kind of go over two kind of, actually technically it's 3 in terms of trade management, and kind of give you those options and explain what I'm doing on top of that, but it's just kind of a variety, right? So what can we do, right? We could take our entry below this candle, right? Our stop would be up here, right? What can we target? If we really wanted to, we could target that -2. Look what this does. Comes down, trades at that -2, gives that retrace, right? Or what you can also do is you can trade on an R basis, right? So once we reach 1R, you go break even. Once we reach 2R, you trail it to 1R. Once we reach 3R, you trail to 2R, so on and so forth, right? That's another good quality trade management system for this. And the reason I like that, and you'll see it here in a moment, once we get to that expansive move down that we saw in PM, right? There's a benefit to it because you're completely removing your stop, or your TP, correction, not removing your stop. You're completely removing your TP and just trailing on an R basis, and that's gonna allow you to capture more of the move, because I will say, with this entry technique on the 3-minute, a lot of times, and you'll see it on these examples today, they are right at the start of a hard distribution phase, right? You'll see that once you get some more screen time with this, right? So that's the first example right there, right? Now, we can go ahead and get into the next example right over here. So there's actually 2. This one I personally would not trade, even though it was a winner, right? It did at least go to 1R. Let me delete this first. And the reason I would not trade this is because we have this immediate imbalance right here. This is usually not something I'm wanting to trade against. And I will basically kind of just completely remove myself from the idea of even taking these, right? So, but on the premise of explaining this right here, I want you to see something, right? So our CSS, how do we validate it? Close below, right? Close above. This is our validated CSS. What do we see right here, right? We get that at least 30% mitigation. We actually come down and tap the 50%, and we would be taking our buy stop where? 1 tick above this candle, right? And if we measure this, why this candle, right? So this candle, we came down, we mitigated the 50, the 30, primarily the 30. That's an important factor here. And what do? We traded back up through that CSS high, right? You can see we got a body closure up above it, meaning we did trade back through it, right? So what can we do? We can simply place a buy stop up above here, stop below here. What can we target? We could target a 1R, right? Or to some unmitigated area right up here, right? Which obviously we have this unmitigated candle, this 951 candle, which could be something of the sort that you want to maybe get an exit on, right? If I come over here and measure this, you'll see you could target that 30% of that if you really wanted to. If you were taking this long, that was counter trade, right? Now, importantly, right, following after that, what do we have, right? Beautiful, beautiful example right here, right? How do we validate? Close above, right? Close below, right? Our CSS is here, okay? What can we do from there, right? We can measure this. What are we waiting for? At least a 30% mitigation. We get that on the following candle, excuse me. This 10:30 a.m. candle right here, we get that mitigation, right? This does not trade back through the CSS low. However, the next following candle does, this 10:33 a.m., right? You can see we trade back through it based on this wick that it presents right down here, coming down to 908.25, right? So what can we do there? Where would we be taking our entry? On a sell stop below this 10:33 a.m. candle, right? Where would our stop be? And look how beautifully this does, right? look how much you can mitigate your risk, right? This, instead of being what would this be, a 44-point stop, right? You can now tighten this down with the dream model entry technique to a 17.25 point stop, which does what? It allows you to go for a bigger target in relation to the range, right? So like that first setup I talked about, what did I say? Fib projections, right? -1, -1.5, -2, -2.5, right? What do we see here, right? We come down to the -1, -1.5. What do we establish, right? We establish some called consolidation here, right? And that's why, right? Those are deviations away from that specific candle. Very important. What can we target? If we really wanted to, we could target that -2 or be trailing on an R basis. What did this already do? Instead of a 2R from this original, we now have a 4.93R, basically a 5R, right? You could even target the midpoint of these, right? The midpoint of fib projections is going to be a very, very accurate point in most cases, right? If you're on the correct side, right? You can see, if we drag this over, look at this, very accurate point. Gives that retrace back up to where? -1, -1.5, right? So there was that example, right? And like I said, you could either be going off of fib projections for targets, or you could be trailing on an R basis, that 1R, 2R, and just gradually moving down 1R every time until you get trailed out. Or you could be going for some sort of fix. You could even do, if you want a crazy high win rate, you could do just a -1, right? Which would just be a 1-to-1. That's all you need. You don't need anything more than that. And that's what I recommend for most people when they're prop trading is 1-to-1s. You don't need to go for those home runs. You need to establish and build up that buffer with the base hits. Those are really what's going to do you very, very well, right? So we'll go ahead and get into the next example for today, which would be this one right here, right? So if we look at this, right, and before I continue, what did I say before? A lot of times these will line up before some sort of hard distribution phase. Distribution, right? This is basically the high of the morning prior to, where was New York open? Okay, so this is AM high right up here. But it was pretty much up there right with the high of New York AM, right? And basically the whole day, we didn't refer back up to that, right? So this next example right over here would be what, right? It would be right here. Obviously, you can see we do have some CSSs down here, but what do? We complete trade through them, we violate them, right? Once the high is taken, like say if we're looking to maybe get engaged in this one right here, right? The high immediately gets taken. That basically means that we completely disassociate with this and we don't even entertain it anymore because the high's taken, right? It's invalidated. We don't want to engage with that anymore, right? So where would our next CSS be, right? Be right here, right? What do we see? A close below, a close above, right? Once we close up above this wick, that's how I validate it for myself personally, right? So what do we see? And actually, before I continue, I do want to, because it looks like, I mean, we have a bearish CSS here, but this kind of goes back, and yeah, let me take a step back, and this is why I like it, because I'm not sure if this tapped the 30 and went down or not. If I had to guess, I bet it did. And this is basically, let me put this back on here. No, I doubt it did. Maybe it did on the 1 minute. But what I was going to say was more than likely, probably on the 1 minute, what happened is we tapped the 30 and went down, and it would have originally tagged you in, right? But with the dream model, where would we be taking our entry, right? It would be below this candle, right? Which never happens, meaning we never get tagged into that position, right? So, like I said, this one for the long side right here, let's look at this. Why did that draw? There we go, right? We get a close below, we get a close above. So now this is going to be our CSS, right? If we can measure this area, what are we waiting for? At least a 30% mitigation, right? You can see we get that on this 12 p.m. candle, right? Then we are waiting for the candle that trades back through the CSS high, right? Which would be where? It would be this next candle at 12:15. Why is it not this candle, right? Well, you can see this more than likely based on where this opened. It popped up a little bit, then went down, then closed, right? So we would be taking our entry on this candle at the 12:12, right? Right up here, buy stop above that, stop below that low. What can we target? We could target a 1R. We could target a 2R, we could target a 3R, could be whatever, right? Now let's do this. Let's get a fib projection off of this, right? That low to the CSS high, fib projection, what do we see, right? We have that -2 up here, -2.5, and then you could even use the -3, and I do want to go ahead and plot that. I'll add those in really quick because you can use those as well. -3, we'll make that black, and we'll do negative 3.5 right here. And we'll make that black as well, right? So if we look at this, right, what do we see? Price comes up and taps what? Negative 3.5. We just wick at it, right? Very important, very, very important. And that would have given you a 3R. Or you could be trailing on an R basis or trailing the highs and lows of these candles because they're all consecutive colors, right? So this is where we get into a really, really good example in PM and why I kind of like the idea and the premise of removing a target and just trailing on an R basis. I personally think that's my favorite of them because you really have the opportunity to catch a really, really big move, especially with how NQ trades. If it's moving clean, you're very, very more than likely going to be a part of a bigger move, right? Catching those bigger profits, etc., right? So this one over here, right? We're kind of in a range, right? Usually in a range, my primary focus is what? I'm looking for that deviation from the range, which would be where, right? It would be right up here once we come up and wick this. What are we doing? We're rebalancing S&D structure right here. Perfect, right? Picture perfect, right? We get that sweep, right? So in this instance, where's our CSS, right? It's going to be that recent break of structure candle right here, right? This 115 candle. This is in sequence with this high at 118, right? What do we get? A body close below this. Now, once that is identified, what are we waiting for, right? We plot this. We're waiting for at least a 30% mitigation, which occurs when? At this 133 candle, right? So from there, we're just waiting for a candle to trade back through the CSS low. Once that closes, where would we be taking our entry? And it would be on this 142 candle right here, right? We would be taking our entry on a sell stop, one tick below this candle, right? So we'd be placing our stop where, right? At that at that candle that trades through the CSS low. And what can we do? Right? We could target on our basis, right? Look at this, right? 1 R's here, right? 2 R's here, 3 R's here, 4 R's here, 5 R's here, 6 R's here, 7 R's here, right? And let's see. So we're at 7R right now. You would not have been trailed out. Let's keep going. Go to 8R. Let's see if this went to 9. So there's 8. Then we have 9. So looks like we topped out or bottomed out around 9. So let's go back up to 8R. You would have been trailed out right down here, right? For 8R, right? 8R, 179.75 points. This move started with the dream model, right? And that's the beauty of removing a TP, right? You're really capturing that. And I really only want to recommend this for end of day accounts or personal accounts. I would not recommend trailing on a 1 hour basis, especially if you're using a little bit of size on an intraday trailing account. I would probably go for a fixed R target, probably -2, -1.5, somewhere around that sort, or even just a -1, which would just be a 1 hour trade, right? And there's nothing wrong with that, right? So that is the dream model, right? It's nothing, I would say it's actually, I personally would lean to say this is probably, in my opinion, personal opinion, this is probably one of the best entry techniques that's out there, in my opinion. It removes so many fake outs. Like, it's actually really, really cool, right? And it does look like, if we go up to the hourly chart, what do we see here? Hourly CSS. Where's the candle that trades through the low, right? If we delete all of this, this is it working out on the hourly chart, right? Let's go ahead and mark this, right? CSS right here, right? Where's the candle that trades back through it? Right here. Sell stop below that. Boom, 1R, right? Let's see. Right there. Look at that. There it is on the hourly chart, right? It's pretty awesome. It's pretty awesome. So like I said, kind of just a recap a little bit. This is, in my opinion, it works the best on the 3-minute. Now it's up to you to decide how you want to trade this, what time frame you want to trade this, and that comes down to your personal back testing. But I will go ahead and tell you that I've spent enough time trading this, looking at this, back testing it. The 3-minute is the best, right? So I do want to say, if y'all have any questions, if this for some reason confused you, I feel like I explained it in pretty good detail on what you need to be looking for exactly, especially with the CSS validation, right? And if y'all have any questions, as usual, feel free to comment down below. I will answer them as quick as possible, or you could just shoot me a tweet or a DM on Twitter at ATP Trades. I do believe my DMs are open, so y'all should be able to DM me. And I hope y'all have a blessed evening and that this helps y'all out, because I truly think it will. And I will catch y'all in the next video. Peace.